Welcome back to another episode of Fund Manager Insights, the series where I dive deep into the minds of India's leading fund managers to decode market trends, investment strategies, and forces shaping our economy. Today, I'm delighted to host once again Mr. Ajit Banerjee, Chief Investment Officer at Sriram Life Insurance. Ajit, as you know, brings over 2 decades plus of experience across banking, treasury, and asset management, and is known for his sharp insights into macroeconomics and fixed income strategy. And in our last conversation, we explored his views on the Indian debt markets and his disciplined approach to portfolio construction. This time around, let's expand that discussion from fiscal policy and monetary easing to global risks and the surge in gold and silver prices and understand what it all means for us investors. Ajit ji, welcome once again to Fund Manager Insights.
Thanks, Radha. Good to be back, and good to be back amidst all festive season. Hopefully, I mean, the darkness caused by uncertainty comes to an end, and this Diwali brings light to all of us. So happy Diwali to start with, to you and your family and your team as well, and to the viewers who would see it, once it gets released in the web. Thank you.
Ajit ji, to start with, India has seen a series of fiscal stimulus announcements and monetary easing measures in the recent months. So, how do you see these policies influencing growth, inflation, and liquidity over the next few quarters, if I may?
Thanks. So, I very pertinent question, and I think it needs to be to respond to this. I need to rewind a bit back, rather. So, if you would recall that last year, the year of general election, we saw that which happened, I think, in uh, over a period of 3 months. And because of our election model code of conduct and all that, during those periods, generally the government-driven expenditures, both at central and state level, generally that gets suspended, remain suspended for that period till such time the code of conduct applies. As a consequence of that, what happened is, because the GDP growth was predominantly coming from the heavy lifting which was done by the governments, actually, mostly out of which again central government. So our GDP growth suffered quite a lot in last year, 24-25. And if I am not mistaken, that fell to 5.4% also for Q1, at the because of the fact that again the government expenditure wasn't there, neither was the state expenditures there, and what was happening was that the public consumption expenditure that had not picked up, because somewhere there was a lack of confidence, or people were not getting that required, I would say, boost to pep up their expenditures and all that. So I guess government has realized that pretty well, and as a consequence of that, throughout the later part of the last financial year and this year, the most of the government expenditure has been front loaded. And as a consequence of that, you were saying that already, the GDP growth for Q1 has come at 7.8%, which was not what was expected. Now, that is as far as the government expenditure is concerned, but that cannot continue indefinitely. So that has to be ultimately backed by corporate expenditures, capex, also. At the same time, public consumption expenditure has to grow up, right? It has to definitely, again, consistently grow. So there was no issue as far as supply is concerned. What the demand needed to be boosted up, and for demand to get boosted up in the last budget, if you see, as per in the when the fiscal policy of the government was presented, so there the income tax limits were certainly dropped, as a result of which the limits were, I mean, raised up, as a consequence of which it was expected that around 1 lakh crores money will come back into the system. That certainly is with the intent that the people would have a lesser tax outgo, as a result of which a higher amount disposable income at their hand to spend, and that money would possibly, part of it would get again converted into savings, part of it will get, will flow into the market as a part of consumption expenditure. That's for part one of the fiscal policy. Now, that certainly has helped a bit, but generally that does not happen in one go, because you will not get the full release immediately, right? It will happen over a period. Now, this is one part. Now, last year, the central government's the fiscal policy is the part of the Minister of Finance role, but the monetary policy is the responsibility of the Reserve Bank of India. Now, Reserve Bank of India, because of the risks that were there of high inflation, because the Monetary Policy Committee, the main task is to control the inflation as well as, so I mean, at the same time keep the inflation under check. At the same time, ensure that there is a uh, growth of the economy which is happening in a in controlled inflation pattern actually. So last year, the main concern was, I think, what the Reserve Bank governor as well as MPC also stated was to tame the inflation. So, in order to tame the inflation, there was a strict monetary policy which was pursued by the Monetary Policy Committee, and as a consequence of that, we saw that ultimately the inflation started coming down because the rate went up quite high, but that also led to a tight liquidity, and because of which actually the expenditure of the consumers further faltered, right? It actually came down. But definitely this year, so there is always a base effect also which plays out. For example, the base effect in this year is favorable because last year was high, right? So the inflation numbers last year being high, when you compare it on a year basis, automatically this year the numbers will always look better. So this year, and to add to that, I think we had 2 years in succession a very good monsoon. The rainfalls are pretty good. Of course, there is a bit of a flood also which is happening in certain part of the country. Mainly, the West Bengal, Northeast, as well as Maharashtra part of it and all, but by and large it has not destroyed or destructed our crops which is in the fields at this point of time. So inflation has come down pretty good. Oil prices has been quite benign. Oil prices has remained benign because of the fact that the global uncertainty remains, right? If the global uncertainty remains, then certainly we cannot expect the economic activity to be at its peak, and therefore there is a drop in the oil prices. Oil prices remaining weak is a boon for India. It's a blessing. So that has happened. So all these put together, there is a favorable inflation environment, and the inflation last print which has come out at 1 point, I think 56, if I'm not wrong. So that is something which is 8 year below, 8 year low, actually, right? So now the Monetary Policy Committee, of course, has the comfort that the GDP growth is pretty good, inflation is under check, and now they are waiting for the how the government's GST reform version 2, what has got announced with effect from 22nd of September. So that is also expected to overall increase the affordability, because the landed cost to the customers is going to come down. So if this happens, so you have actually a bonanza of in the lower income tax rates, which is giving a higher disposable income from the fiscal side. You also have a lower GST, which is now in effect, and which earlier was a 5 slabs, broad-based slabs, that has now come down to 2. There can be some combinations here and there, but the broad-based slabs have come from 5 to 2 now, and it has become less complicated, leading to a higher expectation that the consumption will pick up. Now, these are the fiscal side, which will definitely be boost up the confidence of the consumers to go up. At the same time, RBI also, with the loose monetary policy in terms of 100 basis point rate cut, which they have done. Plus, there is a CRR cut of 100 basis point also, which they have done in starting in 4 tranches. So these are the things which will enable that the ample liquidity is available in the system at a lower cost. Now, if the consumption picks up by virtue of the fiscal steps which has been taken, then certainly the corporates would also, it is making sense at this juncture, possibly to rethink on, if the existing capacity is good enough to service the demand or the projected demand, or is there any need to add capacity. So this way, I think this will, on an overall basis, if you now connect all the dots, what we said is expected to step up the economic growth and the consumption in the.
Interesting. Ajit ji, let me pick up on the structural reform, GST 2.0. So there's a lot of optimism around GST 2.0 being a potential game changer. I agree. Do you think it can meaningfully accelerate India's economic growth? thereby offsetting some of these adverse global pressures we are seeing, which is all across. Every day there is some news coming from that front. So what is your view on that, and do you think the customers actually will benefit at the end of the day?
Uh, See, it is certainly a confidence booster to start with. Okay. Now we have to also keep it in mind that India is predominantly a domestic faced economy. We our While we have a, export exposure outside, but not as much as China, which is predominantly a export driven economy. So that extent, I think, to I would say minimize the adverse effect of the tariff, right? So one alternative can be, which I think government is pursuing for sure, is actually explore different export destinations. Like we have already signed up the trade agreement with UK already, with Middle East countries like Qatar, Oman. This is getting, in advanced stage of negotiation. So I think alternate markets also at a mutually win-win condition is going to, I think, absorb the adverse impact of the tariff, as well as export potential loss which can happen from say lower amount of export to US. That's as far as the government policy which is happening. Now side by side, these things are time consuming matter, because you have to get your products approved, trades negotiated, policy, then parliament approval may happen. These things takes time. So I think, compared to that, because we have a heavy domestic market as well as domestic population to serve, which can absorb the adverse impact quite meaningfully. That's the reason I think government did the right thing of, again, combining both the fiscal as well as the monetary impacts together. And because monetary part cannot alone be good enough to say support this, that's the reason it had to, also fire its ammunition from the fiscal chest that it has. And now with the GST rates coming down, I think definitely the landed cost to the customers will come down. Now, if you see, this has been applied over a range of products. It is not only selected to some products. So this is something which will touch the various strata of the society, both economically endowed as well as less endowed society. Everybody will have a, say, landed cost impact favorably because of this GST now. So what will this lead to? Say certainly your, say, soap and your say detergent prices coming down. Definitely you will not take bath 4 times or 5 times a day because the soap and thing has gone down. But what will happen is your affordability for a higher, say, quality might increase. At the same time, those who were actually earlier not been able to purchase branded or something like that, who have an aspiration to do so, because the price between a non-branded and a branded now has got reduced. So definitely the people at a with a lower I would say disposable purse also will be able to afford and meet up some of their aspirational needs of consuming branded thing, and automatically will therefore lead to increase in the consumption. Similarly, in the with the and that is also getting combined with the fact that you are also having, which we discussed in the earlier part of the conversation, that this is also happening at a time when you have got ample liquidity, at the same time where the interest rates are coming down. So therefore, the discretionary spending also, okay, that is also going to go up, in the sense that if the interest rate is low. So I'll give my example. 2 years back when I took the home loan, I had taken at 8.40 percentage. Right now there is already 100 basis point, because they're all repo linked rate, so it has already come down. So naturally, I mean, I'm getting a benefit, and likewise many people who have actually opted for a floating rate will get the benefit. Now those who are thinking of buying the a house or likewise, so definitely he will get at start at a lower rate. So these are the
Mm.
things which will certainly push the consumer to rethink that, okay, I mean, time for taking a chance. At the same time, I think that will in turn, because if a housing sector and reality sector goes up, because it is linked to so many other sectors, So naturally, that will boost up the so many associated industries as well. So it is definitely a right step in the right direction. However, having said that, there are of course certain concerns which remains as of now. While the tariff has not impacted us significantly, it has impacted only certain few labor oriented or labor which is highly manual oriented industries like leathers, as well as footwear, textiles, gems and jewelries and all that part. So the secondary order impact can be high until and unless we are actually not able to get the alternatives in place properly.
Okay.
So that is something which has to be kept in mind. And hopefully now this is definitely going to be playing out well for India, and we can expect that the overall purpose and objective with which government has and RBI has done these steps will act favorably.
Interesting. Segueing a bit, let's talk markets. If I were to ask you, what's your outlook on both debt and equity in the current environment? And within that, which sectors do you see emerging as key beneficiaries of these policy reforms we touched upon? And where would you advise caution?
uh, See now, honestly, I think both of us are in the living in a very uncertain world where honestly, tomorrow what will happen we really don't know. But I will make an attempt to give my view, what we think as our in-house view, as well as my personal view. See, if you see the equity market over last 1 year, Nifty 50 has given a return of, I think on an annual basis, negative return of 4.6%. Similarly, Nifty 100 has given a negative return of 6%, which is the lowest among these emerging markets. That's a fact. However, if we look at on a quarterly basis, this on a quarter basis number, then we are seeing some green shoots, which we are seeing early signs of green shoots. Even the results which are also started coming out are not as uh, management commentaries are not as pessimistic as it used to be in the previous quarter. So that's a good part of it. So there are certain things will certainly will play out for India, and the tailwinds are certainly blowing. One, as we mentioned, that I think the lower interest rate environment, at the same time the consumption pickup has to happen. At the same time, we are also possibly seeing a very minimal impact of tariff as of now. Of course, now what we need to also keep it in mind that as of now, the tariffs announced by US are mostly on the goods, services not been touched. So, if that leads to that, what US president is also, there's a discussion going up around higher policy, which can impact the services sector also. If that happens, then we may have to once again, I think, rethink that what is going to be the impact on India. But apart from that, I guess on the face of it, the tariffs has impacted only selected few sectors. So the sectors where we are finding that there is some merit over a longer period of time, certainly financial sector is the one. And at the same time, we are also auto sector is looking good because of the fact that low interest rate as well as the GST has given a booster to it, and we are seeing those demands also playing out. Apart from that, we are also good as far as we are seeing good prospect on the metal sector. Leaving aside steel for that matter, I think copper, aluminium is looking good. Silver is also in any case doing good actually, and at the same time, uh, pharma sector domestic demand is actually looking good, around 8% demand we are expecting. And then I think once the results and the management commentary comes out, then I think we should be in a better position to say that how the equity sector, equity market will pan out over the, I mean, next few quarters as well as the next year is concerned. That's as far as equity market is concerned. But over a longer period of time, I must also say a fact that we should not get too much perturbed by this, because equity investment is meant to be perturbed. I mean, there is a difference between being an investor and being a trader. We approach the market from an investor's perspective, and therefore we have to be patient, because these what we are seeing is that, see, the one aspect which has to be kept in mind, that in, say, the domestic institutional investment as well as the retail SIPs and all are playing very strong. If you see over last post-COVID era, if you may see, we have not seen much correction happening. Why is that so? So even though actually, the FPIs have pulled out $2.03 trillion from domestic, 2.03 trillion rupee from Indian market. Okay, but DII's flows have continued to give the adequate cushion, and DIIs have actually pumped in current calendar year 2025 over 6 trillion rupee, which is almost three times. So as a result of which, even though the FIIs and FPIs are pulling out the money, but domestic market is moving in a sideways. We aren't seeing much correction happening. So even though you would want that, some amount of position to take because the markets are expected to come down, but that's not happening actually. The gap is getting immediately filled up. So that's something certainly a good thing which is there. The valuations have corrected to a certain extent from what we had seen earlier. And if you also see that, I think from 2020 onwards, barring one or two few small, I mean, drops that we saw, but in large, we had seen that market delivered a very good returns per se, and it was a broad-based return. So therefore, a mean reversion was bound to happen. The valuations actually were quite expensive, and at the same time, what we saw is that other emerging markets like China, I think Brazil also, they were looking good. So naturally, the FPIs and all, they are mainly fair weather friends, and they generally look for values wherever they can. And naturally, wherever they got the opportunity of investing, they moved out from India. So again, if the valuations come down, they might again come back. But that is not happening because the DII is not giving them the breathing space. That's as far as the equity market is concerned. As far as debt market is concerned, I think we have seen that because of this GST as well as other compensation, there is not much dent which is going to happen on the fiscal health of the country. As a result of which, I think what was targeted in the budget, that the fiscal deficit will be kept at 4.4%, that would be, I think, will be near to that. So even the borrowing calendar, which has got announced by the government for H2, they have not increased the borrowing, calendar, and also the borrowing pattern also has been a bit slightly changed, I would say, towards more focus on the issuance at the belly of the curve, which is a good sign. And it is not now more skew. In the H1, we saw more skew towards the longer term, because to minimize the rollover risk and all that. But that, I think, it has been not considered this much, and the issuances has been more towards the belly of the curve. That is a good sign. So that way, the fiscal health is pretty much good. At the same time, there are some other macros also which are significantly looking good. We are sitting on a quite good forex reserve. I think Q2 we ended at a forex reserve of $700 billion, which is pretty good. Our current deficit was also 0.2% of the GDP. So while the trade deficit has increased a bit, that's a fact, but not very significantly. So as a result of which, the MPC also decided at this point of time in the October policy to once again maintain a status quo, and that was the rates were kept on hold, and that was a unanimous decision. Only there was, I think, a bit of a uh, I would say the voting was 4-2 as far as changing of status is concerned. From once again, two members wanted it to be moved back to accommodative from neutral. But I think the governor, from the minutes, NPC minutes that has come out as other members, it is very clear that they don't want to rush all the measures together, because that might give some panic signals to the market. They want to take it in a gradual way. They have indicated that they are ready for the ammunitions to be fired. but only when if need arises, because inflation is pretty much under control. Growth concern, they will need to see that whether this tariff things, because of too much uncertainty, we are hearing one day some positive news, next 2 days again negative news. So they also want to be a bit clear as to how this tariff thing is eventually playing out. Because monetary policy, you cannot, announce like tweeters that, today there is a rate increase, tomorrow there will be rate down. Then the market will get confused and puzzled. So keeping those things in mind, I think the message is very clear from the MPC that they are ready to further do a rate cut if only the need arises. So these are all very, I think, broad indicators of the debt and equity market. The yields as a consequence of that has cooled down. Long-term rates have come down. State governments are also issuing. Now, I was reading yesterday an interesting piece of information that the corporates have also, borrowed this year close to about 5.47 trillion dollar of trillion rupee in India. So which is again a good sign. Out of which the Q1 they had borrowed about 3.44 trillion rupee, because Q1 they had seen that the rates were pretty much in a lower trajectory. But Q2 again, with the uncertainty and tariffs getting panned out, I think the rates went up for a bit, which is again calming down. But still, overall, the corporates borrowed around 5.47, which is a good sign, which means corporate confidence in the market for capacity expansion is also, and borrowing is also. A slightly longer answer to your question.
No, perfect answer. Um, Let me ask about gold and silver prices, which are hitting almost new record highs on a daily basis. I even saw a social media post where people were standing in a queue in Hyderabad to buy silver. So, what's driving this surge? Is it global uncertainty? Is it inflation hedge, or structural demand, or even FOMO? And how should investors think about allocating to precious metals now?
See, it is a combination of both, I would say. See, if we now again for this also, if we need to slightly look back a bit, because uh, while the prices generally for these two precious metal keep on surging, but not at that meteoric way in which it has happened over the last 1 or 2 years, if you may see, and that too more over last 12 months post Trump has come in, right? So this is
True.
generally a natural hedge which Indian domestic households have always done as a safe haven investment. So that's one thing. The other thing is because after that Russian invasion over Ukraine, we have seen that Russian assets in US treasuries got freezed, right? So I
Hmm.
think that is something which was noted by other countries also, who also maintain their so in investments in US treasuries and all, that if like this happens with them also, so then they resorted to alternate safe investments for, and naturally countries like India, China, I think Brazil, as well as Korea or Vietnam also, they went into heavy buying of gold. European countries haven't done as much as what these emerging markets have done. So naturally, and these central banks, when they buy, they buys in tons, right? So as a result of which the price went up quite significantly. To add to that, after Mr. Trump has come in last year, I think uh, the uncertainty and volatility is the everyday matter now. That is the new normal. But naturally, people want to stay protected and remain hedged. US dollar also has weakened quite a lot. When dollar gets weakened,
Hmm.
then generally people try to buy, golds and silvers. So as a consequence of that, I think the gold prices started again. No, it fanned the fire actually to go up further. And to add to that, in any case, I think what has happened is the gold ETFs, for that matter. Okay. Now, a new generation which is also uh, interested in gold, but not in physical form, but in form of ETFs. That is also, so gold. The mutual funds who maintain these or run these gold ETF funds, they are also seeing a huge inflows coming to them. And generally, bear it in mind that these ETFs has to be backed on the same day by equal amount of gold. So the physical
Correct.
demand of gold is in any case happening, right? So that's as far as gold is concerned. Until such time this uncertainty remains, Now, to add to that, there is also coinciding with our marriage season as well as festive season. So this will continue to be. An interesting thing, you would have also taken note now. Earlier, the combinations of the gold was in 24 karat or 22 karat. So now there are some jewelers who have also, made a lower version of that by 14 karat, 9 carats, and all that. So that it's like sugar passion, sugar patients. To get the taste of the sugar, add the sugar freeze to the tea and coffee, right? So that you don't miss out the taste of the sugar, although it may not be as tasty as a natural sugar. So I think this combination of this, 9 karat and 14 karat is also playing well. So this is keeping the momentum for gold is concerned. Now, as far as silver is concerned, yes, silver prices I was seeing actually, it is now 1,64,660 rupees per kg, and gold is 1,28,395 per 10 gram, as per yesterday's mint report which I saw. And the returns of gold has been in calendar year 25 is over 66%, and MCX silver return is 87%. So naturally, if this sort of return you get, and comparatively, if when the equity market is giving you a negative return, there is always a propensity to invest over there. So now, specific to silver, actually silver utility also has increased significantly in the renewable sector, as well as in the electronic sector quite significantly. Industrial usage of silver has increased quite a lot, and what has happened is there is a bit of a shortage of physical silver at this point of time.
Hmm.
I think the traders, as I understand, they had already imported quite a significant amount of silver in anticipation of this festive buying and all that, which was there. At this point of time, I think there is a bit of a demand and supply gap which is there, which is also leading to the silver prices going up. So, to the other part of the question, that whether this will continue, uh, it may continue for a while, but at the same time, there can be also bit of a, I would say, slight correction which can happen if the uncertainty quotient comes down, because you are also investing as part of hedging activity. So that can see a bit of a dip, but overall, I think upward biasness would be there, but not at this parabolic way or meteoric way what we are seeing now.
Interesting. And despite short-term volatility that we are seeing, the India story in paper remains very strong. So, if I were to ask you, what long-term, really long-term structural themes or sectors you believe will drive India's next phase of economic growth?
See, one thing is that, when we are in any case as a nation quite committed to develop ourselves because of the pledge which the nation has taken. I mean, led by the Prime Minister's clarion call there by 2047, we want to make India Viksit Bharat. Now, certainly, the talent pool that is available is something which the world envies upon, right? So, as a result of which, actually, I think, I mean, definitely the market is available, at our disposal. Now, what has to happen is to strike a proper balance between just leading a economic growth or a sustainable economic growth. Lot of discussion is happening at the various levels. We are seeing that whether we need to further get into a model of the inclusive growth in reality, because what is happening is too much of clogging and congestion is happening around selected few pockets of the country, which is also leading to distortion of the ecological balance.
True.
So this is not a very sustainable way. So a formula of sustainable economic growth is something which is getting worked upon, which would definitely mean that we have already heard that the concept of smart cities and all, which definitely needs to happen. That will not only bring our actually cost of servicing or cost of production down, but will also spread the economic growth across the length and breadth of the country. At the same time, the ecological balance will also be maintained. Number one. Number two, so naturally the infrastructure sector is bound to go up. That is definitely going to happen. So the sectors which are linked to the infrastructure development, which would mean that say hard assets like metals as well as cement, steel, all those are bound to definitely grow and has to grow. At the same time, we have also realized that a strong economy, a nation with strong economy also needs to have a adequate and strong defense to, facilities available to protect ourselves, right? So even so far, the stress which has been given by the government in building a very strong defense force, the practical application of that we saw a few months back, right? So
Correct.
I think that would continue. So the defense related sectors, be it, say radars, be it actually your equipments and all those things, whatever, I think that I just named two, which just came to my mind, but entire gamut of the, I think the activities, ordnance factories and all those, which certainly I think will be further fortified as well as further, enhanced. That's something which the aircraft industries also, we recently heard that the entire Boeing industry, the Boeing board was in India. Again, I'm just taking this name just to give you some
Context.
context. I mean there is
Yeah.
no particular company I want to name consciously, so which is just demonstrating the fact that there is a possibility of some supply chains as well as some setups going to happen from these global companies also. Apart from that, I think shipbuilding is something which the government also is trying to, put its focus upon. So that is something which can be looked into. So I think what we were saying is a nation with strong economy also needs very strong defense, and that is something which India has been pursuing it, and it has certainly it has worked in our favor. We have seen that practical demonstration happening. As a consequence of that, I think further taking it to the next level for developing our, I think, defense capability, be it shipbuilding as well as other, electronic radars, drones. Those things are also happening. We have also seen that already. Some India exporting defense. I think last year we had exported defense equipments worth 20,000 crores, which was never thought of. So I guess that is going to, be the order of the day going forward as well. Apart from that, as I mentioned, that there is also a thrust being laid on making Atmanirbhar Bharat, and it is not just a talk or a phrase; it is something which is also happening in reality. We are seeing that. See now, even the Vande Bharat, this rakes and coaches are also getting built in India. Technology transfer is happening. So we are also seeing that. I think day before yesterday, I saw in paper that dedicated freight corridors is also going to get extended in. I think six more zones where
Wow.
the trains will be able to ply at a speed of 350 kilometers per hour. So imagine if you have to build that sort of facility, again, how much of infrastructure would get into it, right?
Correct.
So plus on the again on the semiconductor space as well as on the I think chips and all those things are also very much progressing. Many things possibly always do not catch our attention and all because we get too much distorted by so many disturbances here and there. But certainly, I think we are on a long term economic growth and haul, I would say. Plus, apart from that, I think. Much is also happening on implementation of I think sophisticated modernized agricultural space. So I recently got to meet somebody in the Ministry of Agriculture also, where I got some discussions. Specifically, of course, I would not be able to speak out here, but what I could understand is that there is a lot of development as well as experimentation for improving our agricultural yield. Better forecasting for the natural calamities and all. So those things are really happening. So I think as a responsible nation, I guess many activities which will improve are happening. But at the same time, yes, uh, possibly manufacturing sector, if these things all fall in place, then the revival of manufacturing sector can also be seen into. That's something which is really good, and I guess if that happens, then the rate of disguised unemployment, which is quite heavy in India at this point of time, I suppose that should also get reduced, is what I feel.
Interesting.
So these
Fine.
broadly are the long term stories.
Excellent, excellent. Finally, Ajitji, for investors trying to navigate these complex macro shifts that's happening and what we briefly discussed, if I were to ask you, what's your one broad piece of advice?
See, one thing would be that we should be very patient. Okay, I'll tell you one anecdote to this. Few days back, one of my elder brother's friend called me up. He said he got to hear from my brother that I'm in. This is my job and all that. And then he was saying, asking me for some suggestions, recommendations, and all. He said that, I have whenever I've invested money, I have lost. I said, when did you start investing? He said that he started investing in 2020 onwards. I said 2020 onwards, you said you have started investing and you have not made any money. Am I to believe it? Well, yes. Because I said that what was your average period for which you remain invested? No, actually मैं डेली देखता था स्टॉक को और नहीं इम्प्रूव हो तो मैं निकल जाता था वहीं पे तो गलती है ना वो so just this anecdote is to illustrate the fact that where
Correct.
we make the mistake is like sometimes children do that whenever we at childhood level also whenever we used to put the seeds in the pot every day we will in the first thing we'll see in the morning whether the trees stems have come out and plants leaves have come
Correct.
out or not.
True.
Now that doesn't happen. We need to be patient at the same time. We need to, understand that what the self risk assessment is very important. At what phase of my life we are in, at the same time what is my risk appetite, what I can take, what are my priorities in life, what are my say liabilities that is I mean already there, or am I I think fortunate for that matter that I don't have anything to worry about. Then you can possibly, depending upon the age where you are, after you have ensured that you have taken adequate protection on the health side as well as on your basic covers and all, then you can take some aggression. So first thing certainly would be to fortify you, assess you first, number one. Number two would be to ensure that the basic safeguards or guardrails are in place in terms of the health covers as well as the other protections that we require. And the third stage, like when the like in cricket parlance, when the balls are loose, we have seen Yuvraj Singh, Saurav Ganguly all stepping out and hitting the ball to the outside the fence. So you can do that once you have seen that there are adequate fortifications around you. Fielding restrictions are there, ground is open, then you can hit those sixes actually for sure.
Interesting. And as always, we would love
So
to end with your book recommendation. So, any recent reads that have influenced your thinking on markets or leaderships in general, we would love to hear.
actually, one book which I got few days back, Psychology of Money. That's something which I have read, and another book not related to the market, but it is something ideas that make it big. There's one book actually by David J. That is something which I just read, and few pages, and I cannot say I have read fully, but few pages are left to be there. And also, I've got another book recently on artificial intelligence, which I intend to read. That is on my to-do list actually. So yeah, and apart from that, generally the journals as well as the I think articles as well as hearing to some of the policymakers. As see nowadays, the over the net also, you if you are able to choose it well, then I think you get a lot of reading materials and you can hear to people, attend conference. That also helps quite a lot. So I do a mix and match.
Excellent. Ajit ji, it was once again a pleasure to catch up with you, and I look forward to more such catch ups in the future because the next few
Sure.
years are going to be interesting, as you said.
Yes, definitely. Yeah. And I mean, I think going forward, every day is going to be interesting. So, so we have to always keep our taps on. And thank you. It was a pleasure once again reconnecting with you. And always would look forward to again once again interact. Thank you so
Thank
much.
you,
Wish
and
you all the
happy
best and happy
Diwali.
Diwali.
Happy Diwali to you and
Thank
your family and everyone out there in advance.
you.
Thank you.
Thank you. Thank you. Yeah, bye.